Good morning and welcome to NYSE TV Live. I'm Kristen Scholler coming to you from our studio above the trading floor. And as the bull market enters its second year, it is not showing any signs of slowing down. Stocks, in fact, are coming off of a record close with technology names leading the way in Monday's session. Now this week, all eyes are on corporate earnings and big bank results continue to pile in. While investor sentiment remains high, let's take a look at what is on tap for today's show. NYSE listed big banks like Citigroup, Bank of America, and Goldman Sachs reported quarterly results before the bell. We'll dive into what it indicates about broader economic health. A markets expert and a banking analyst will join me live. Plus, Latin America's biggest natural gas transporter, TGS, will celebrate the opening bell. And its visit comes on the heels of Argentina's president's recent appearance here at the stock exchange during the UN General Assembly. The company's main shareholder will speak to me live on the floor. And space continues to be in the spotlight. SpaceX successfully caught its massive Starship booster in its fifth test flight over the weekend. Space investor Chad Anderson will join my colleague Trinity Chavez with more. Let's turn back to equity trade, which is about to start behind me. The big question is, how far can this two-year-old bull market run? Well, joining me now with more is our market expert, Ryan Dietrich. He's a chief market strategist at the advisory firm Carson Group. Ryan, it's great to have you on the show today. And as we see stocks right near record highs, how healthy does this bull market look to you?
Yeah, first off, Kristen, thanks for having me. And this is a great news show. I'm honored to be here. Let's put some context around it. Like you said, we just had the 2-year, some people call it anniversary. I like to call it birthday. Maybe we could argue on everything. We can argue on that. I'm calling it the 2-year birthday for the bull. And when you look historically, Kristen, I went back to all 11 bull markets since World War II. The average one lasts over 5 years, right? This one's right at 2 years. This one's up about 62, 63% on the S&P. Your average one gains like 180%. Now, median's a lot lower because we had some extremely long bull runs before. So you don't just blindly say, oh, well, just because it's 2, it's going to get to 3, 4, 5. But, you know, the underlying pinnings that have gotten us here, probably last thing, we communicate or talk a little more. What about market breadth, right? Right now, like literally yesterday, we saw new highs, right? But advanced decline lines on the S&P 500, the NYSE, the Dow, small caps and mid caps, all hit all-time highs on Friday. Almost, I think it's like 89 point something. And closed up for government work, almost 90% of all the small caps in the Russell 2 were higher on Friday. These are signs, again, this market is broadening out. It's not just about 7 stocks. There's a lot of participation, and that's the hallmark of a bull market. Why we think this bull market probably has a lot of legs left, I guess we'll say, Kristen.
So I've got to ask you what may seem like the obvious, Ryan, but I'm sure part of this rally is fueled by money finally coming off the sidelines as yield might look more attractive in stocks with the Fed lowering rates. Is that what it seems like to you?
Yeah, I mean, that's part of it, right? I mean, there's a lot of different reasons we're doing what we're doing here, hitting all-time highs. I mean, 45, right? I believe it's 45 all-time, or 46. Yesterday was 46. 46 all-time highs on the year. Who knows? Just wait a day. It'll go higher. That is like the 9th most new highs we've ever seen in any one year. So, yes, you have obviously the more dovish Fed. That clearly is a tailwind. We saw what the hawkish Fed in 22 did with a terrible year for stocks, terrible year for bonds. That's part of it. But I'll tell you, we're in earnings season, right? And you look at earnings, forward estimates on the S&P 500 are record earnings right now, up substantially more than we were just a couple of years ago, just from what we expected this time a year ago. So you've got earnings at all-time highs. You've got an employment backdrop that is aging, but as we saw the recent job data, it's not just falling off a cliff. Yes, people, it's a little hard. It's actually a lot harder to get a new job right now. People are staying where they are, but people are not getting laid off. So when you see the aging labor force, but it's still a healthy labor force, with the dovish Fed, with the consumer that continues to surprise the upside, with services that continue to be strong. Yes, I think we just saw some manufacturing data again this morning, a little weak, not perfect, but the services part of our economy is much larger. And then the cherry on top, in our opinion, Kristen, is productivity. We haven't seen strong productivity in our country since like the mid-90s for an extended period of time. We are seeing finally stronger productivity. That to us, we've been saying for almost 2 years now, we expected to see stronger productivity, and that could be this magic elixir to keep this economy and bull market going. And fortunately, it's all happening.
Certainly, it does seem to be a lot of tailwinds playing a factor here, Ryan. Certain sectors that you anticipate that could outperform based on what we see is shaping up this earnings season?
Sure. I mean, the two that we've talked about all year are financials and industrials, and I know they've been on fire lately, which I'm not complaining about. I mean, look, I can't give individual recommendations, but a stock like GE, okay, it is like the highest it's traded in over 20 years. That's obviously a big industrial name. Then you look at financials, like there's the big 6 financial names since Friday morning when financial earnings started, up like 7% on average. So again, it's early in earnings season. Let's be very clear. But again, we think the economy's on stronger footing than people give it credit. You've got record highs in the financials, industrials, but also relative strength versus the S&P 500 hitting 52-week highs or all-time highs. Those are tailwinds, again, that we think are really positive. The other group, I know sometimes it's a dirty word. We've had a slight overweight to small caps all year. Yes, they've been frustrating, no question about it, but they are historically cheap relative to large caps, and also small caps do a lot better once the Fed actually starts cutting. So again, we saw Friday, right? Almost 90% of the Russell 2 was higher on Friday. That might be kicking off again another period of outperformance from small caps. Honestly, mid caps also have probably been our largest overweight. So those are some areas we like here, Kristen.
Any seasonal trends, Ryan, that you're watching that could fuel markets, of course, in these next few weeks? Yes, amid earnings, but also approaching the election.
Well, we are approaching, the election. Oh boy, here it comes. Today's Tuesday, right? So just a few weeks from today. But you think about it. Here's what we know. October is the most volatile month. In an election year, it's actually the worst month on average. Now, that's skewed because of 2008 and some other big drops. At the same time, we're still thinking it's possible after the S&P's up 5 months in a row, after the S&P's up 10 of 11 months. As we get closer to the election, we could have some skittishness. And I know this morning, crude oil's down 5% on some optimism about, the Middle East, where they're going to attack, where they're not going to attack. The reality is, again, the economy's strong. Yes, we're probably going to get some pre-election jitters. One final number here. When you're up 20% for the year on the S&P going into October, the month of October has only been higher 2 out of 9 times, down like 3% on average. So believe me, we've been bullish. We're still overweight equities. We're just saying let's be open to the idea of one of those quick 4 to 6% potential, kind of hiccups, if you will, sometime before this election.
So GDP growth up 3%, of course, in the third quarter. We expect a decent earnings season. It seems like there really aren't any signs, Ryan, of a recession out there, that the so-called soft landing has officially happened. What do you think?
Well, we do. I mean, listen, we've been on record, soft landing, hard landing. We've been saying for a year and a half, the plane had plenty of fuel. There's no landing needed. That's kind of the lingo we've used, and we're still there. Now, listen, let's talk about maybe some worries, because there are a lot of positives out there. A lot of people are turning bullish all of a sudden. Just this morning, that Bank of America Global Fund Manager survey, I didn't get total time to dive into it, but take a wild guess. People are optimistic. Now the economy's good. Everyone's realizing that things aren't that bad. The Atlanta Fed GDP now says we might have 3%, more than 3% GDP growth this quarter. So that'd be back-to-back 3%. I mean, there's a lot of positives. Maybe from that contrarian point of view, we need to kind of upset the apple cart a little bit after up 10 of 11 months. That's perfectly normal. But again, the bottom line, the consumer's still healthy, right? Initial claims spiked last week, but then you kind of look where it was in our country. Obviously, so many people impacted by the hurricane. That's why that happened. So still, we're still optimistic, but maybe my biggest worry is everybody's realizing things aren't that bad. And now Mr. Market might surprise a lot of people here.
Ryan Dietrich, thank you so much for joining. We're going to check in with Ryan after the market opens. Ryan, of course, from the advisory firm Carson Group. All right, well, coming up, investors are keeping a close eye on the banking sector this morning, and we see these big banks rising pre-market. We'll dive more into the results, why shares like Bank of America, Goldman Sachs, and Citi are higher pre-market, as well as what these results mean for the sector. Stay with us.
So, Peter, now tell me, what service does Spire provide, and what is your ultimate mission in space?
Spire was founded 13 years ago with a mission to leverage data from space to improve life on Earth. So we have a massive satellite constellation, the 4th largest in the world, to collect data about all sorts of human and nature's activity and provide it as a subscription to customers, over 700 all across the world.
Now, McKinsey recently said, if you don't have a space strategy, you need one. So tell me, what are your thoughts about that statement, and do you think McKinsey is correct?
I do think McKinsey is correct, and they placed an analog to what they said in the 90s about internet strategy, because they recognize that there is an exponential technology that is driving the improvements of the capabilities. Back then it was computers and the internet, and today is space. So I do believe that they are correct. And space is already used every single day by more people than they know of, but that is going to dramatically increase in the future.
Peter, can you talk about the technology behind Spire satellites that can deliver these solutions to its customers?
There are three types of spacecraft or satellites. There are those that look, they basically take reflections from the sunlight. There are those that talk, they're basically transporting data from one spot on Earth via space to another spot. And then there are those that are listening. And that is what Spire does. We use radio frequencies to observe the weather, ships, planes, soil moisture, wind speeds, all sorts of information. And then we analyze it and deliver it to our customers as a subscription.
Now, Spire provides what it calls a space as a service. Elaborate on what this is and who are your customers?
So when you think back to Amazon back in the days, they were selling, books and other products, but then they had to develop.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in the studio above the trading floor. Well, earnings season is ramping up, especially when it comes to big banks. They always kick off the earnings season. And among the companies that reported their results this morning, they do include NYSE-listed firms like Bank of America, Citigroup, Goldman Sachs, and State Street. Well, these earnings for the big banks, Bank of America, Goldman Sachs, Citigroup, exceeding expectations, and those stocks reacting accordingly in the pre-market. All of those stocks up several percentage points among the big banks. We had seen stock trading sales and investment banking revenue really driving the results for these big money center banks. Now, even though the biggest banks kick off earnings season, we know regional institutions are also in focus as investors look at the health of the sector and really the broader economy when it comes to factors like loan growth. Well, joining me now is David Chiaverini. He's the managing partner of equity research at Wedbush Securities. David, it's great to have you on the show this morning. And as we see many of these financial companies now start to report, starting with the big banks, how does their performance indicate what we might see for your coverage area?
Yeah, so far so good. And looking at the big banks' results, net interest income has been coming in better than expected. One of the headwinds is on the loan growth front. It's anemic and subdued. We're expecting that to continue. But what's really important here is the outlook. Now that the Fed has pivoted to lower rates, we think that liability-sensitive names are really going to benefit here. It could be a catalyst for improved loan growth. And I'd say probably the most important thing is credit quality. Lower rates is going to help borrower credit quality so that they don't have as many issues that they would have had if rates were higher.
So we had seen the first rate cut by the Fed actually occur at the end of this reporting season, right, in September. And so talk to me more about what might show up in these regional bank results that we will be getting on tap here before we get into deeper rate cuts by the Fed.
Yeah, so for the third quarter, I don't expect the rate cut to really impact the third quarter results, but it should impact the outlooks and the commentary from the banks. And that's where we'll find out, how quickly they'll be able to lower deposit costs, how quickly their loans will reprice lower. And then it's a balancing act, right? Some banks are putting on hedges to protect against lower rates, while others are just naturally asset sensitive and won't put on any protection. So it will be a bit of a mixed bag, but I don't expect the third quarter results to be impacted by the Fed cut.
Noting what you said earlier about borrowers and simply the level of debt that is out there, because we know many Americans have been struggling to get by when it comes to basic essentials and certainly racking up credit card debt along the way. How does the cash reserve system look like for some of these more regional banks that are seeing borrowers with very high credit?
Yeah, there's still a lot of liquidity in the system. When you look at money market funds, we're pushing $7 trillion, and commercial balance sheets are still very healthy. When it comes to the consumer, it's a bit of a tale of two cities. The lower end and lower income consumers, they're the ones who have been struggling more with inflation, whereas the upper end is very healthy. We're talking about how the stock market is at all-time highs. That's generating a lot of wealth. Look at all the home equity that's been built up in homes. So it really is a tale of two cities, but the concentration of wealth at the upper end, that's what's pulling through with the economy. And that's why GDP growth continues to be positive, at least in my view.
And that GDP growth, as you referenced, David, of course, up 3% in the third quarter, I think, defying expectations that we had seen out there. But managing, obviously, the loan growth and what we see, especially when it comes to borrowing costs, any sort of indication from you as to when we might start to see the housing market turn as lower rates are expected to be on the horizon?
Yeah, it's a good question. I would say, listening to our housing analyst, rates would need to get below, say, 4% to really kickstart the housing market. Now, every incremental move lower is going to help. When we saw mortgage rates come down to 6%, we did see a bit of a catalyst on the refi front, but we need to see more rate cuts to really get the housing market going.
So we do see big banks reporting this morning, those stocks higher pre-market. Do you anticipate that we could see a similar equity reaction to the regionals when they start to report?
I think so, especially if the banks are able to communicate the net interest margins, remaining stable in the near term. And then particularly for the liability sensitive banks, I think they could be in position to really benefit given the outlook for rates.
I'm just curious, in terms of some of the events that we see unfolding across the country, how some of these liability institutions, which you're referencing, could be impacted.
Yeah, so the way that they'll benefit is, now when rates were going up, it was bad for the liability sensitive banks because their cost of funds were elevated. But now the tables have turned, right? With the Fed pivoting, when rates come down, they'll be able to reprice their deposits lower. So that should lead to an expanding net interest margin for those institutions. Now, conversely, the asset sensitive banks that have benefited from rising rates, they're going to see their loans reprice down faster than their deposits, and we could see some net interest margin compression. So we did pivot when we put out our preview a few weeks ago to upgrading some of the liability sensitive banks and downgrading some of the asset sensitive banks.
Interesting, David. Net interest income, just a quick question there. We only have about 20 seconds left. How do you expect that to change for some of these institutions as the Fed lowers rates? Of course, that's the money that these banks make on the loans that they give out.
Yeah, so we're expecting net interest income to kind of stabilize over the next few quarters. When looking at the big banks, for instance, JP Morgan, that reported on Friday, they're talking about a bottoming out on NII mid-2025. I think the liability-sensitive banks probably bottom out early 2025, and then the asset-sensitive ones are probably going to be under some pressure through the end of next year. However, loan growth could be the offset. If we do see a catalyst of loan growth picking up with lower rates, that could offset some of the pressure that we could see on net interest margins.
David Chiaverini, Managing Partner of Equity Research at Wedbush Securities. David, thank you so much for taking the time this morning.
Thank you.
All right, well, in a little over 10 minutes, NYSE listed TGS, that's an Argentinian-based gas transportation company, will celebrate the opening bell as it does mark its 30th year here, listed as an NYSE company. TGS operates the biggest pipeline system in Latin America and manages the production and commercialization of natural gas liquids for domestic and export markets. What you're seeing here is the company's stock certificate when it joined the NYSE community back in 1994. These historical archives are so interesting that we have here at the exchange. Well, later in today's show, I'm going to be joined by Marcelo Midland. He's the chair of the TGS holding company, Pampa Energia, right from the floor of the stock exchange about what this day means for the company and where he wants to see it go from here. Pampa Energia, by the way, also an NYSE listed company. All right, we have much more to get to in today's program, including an interview with a Nobel winner. Stay with us.
Elastic is an AI-powered search company. So Elastic sits at a very interesting point in the market right now. We sit at kind of the nexus of cybersecurity, data, and artificial intelligence. Cybersecurity has really morphed into a data problem. So now we're a leading provider of threat analytics and cybersecurity. And then in addition to that, everything that's happening right now with generative AI requires a search platform to be able to feed the generative AI model. So we're doing a lot with artificial intelligence.
Tell me how the integration of AI into your business model has really shifted your priorities.
We've recently announced an AI integration capability with our cybersecurity platform that you can put in your unique capabilities in your enterprise or in your agency to identify new threats that are coming in and prioritize threats based on your unique environment.
What would you say sets you apart from your competitors?
The way that Elastic works, we have this capability called data mesh or cross-cluster search, which allows you to embed small Elastic clusters in all of these different environments, whether it's in multiple clouds or on-prem, and just bring back the results that are relevant to a centralized location. Because of our open source roots, everything is open standard. So it integrates, our technology integrates very well with our existing government environments, and we can run it at a very large scale.
How is Elastic navigating through today's cybersecurity challenges in today's economic landscape?
Elastic allows you to search this tremendous amount of data coming in, and now integrating some of these AI tools allows you to find the threats that are most relevant to your environment and remediate those threats quickly and take a lot of that burden off of the security operator. The integration of AI into the security tools is going to help us continue to stay ahead of the bad actors and the emerging threat.
How do you ensure data privacy to your customers?
We have a vector search database that is required to use for generative AI and large language models. So they require a vector search platform. Essentially, we can organize unstructured data to be able to search that data very quickly and provide the relevant information that our customers are looking for. You also want to be able to provide some security controls in terms of role-based access control or even field-level security control in the data.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, on Monday, a trio of U.S.-based economists earned one of the world's most prestigious honors. MIT's Darren Acemoglu and Simon Johnson, along with the University of Chicago's James A. Robinson, were awarded the Nobel Memorial Prize for Economic Sciences. The prize motivation was, quote, for studies of how institutions are formed and affect prosperity, end quote. Well, the three economists will also share a $1 million cash prize. My colleague Trinity Chavez is on the trading floor and has more on this story. Good morning, Trinity.
Good morning, Kristen. That's right. So the Nobel Committee says that these three economists have demonstrated the importance of societal institutions for a country's prosperity. One of the honorees, Professor Simon Johnson of MIT Sloan School of Management, is joining me now to discuss this further. Thank you so much for joining us, Professor, and congratulations.
Thank you very much.
So what was your initial reaction when you heard the news?
I was surprised and delighted.
Surprised and delighted. Well, your research and all the important work that you're doing really highlights how poor institutions and weak rule of law hinder economic growth. Can you explain the most surprising or most important finding of your work?
Well, I think the most important finding, Trinity, is that while the sort of a necessary layer of property rights and equal protection before the law and political rights that you need for shared prosperity, it's also really important to have a responsible degree of regulation, including self-regulation, like through the stock exchange, including financial regulation of financial regulators where appropriate. And I think the US, as obviously we debate these issues all the time, and I think we struggle from time to time to find the right balance, but I think overall the outstanding success of the US as an innovative place and a place for capital to be built and a place where workers get paid decent money is largely due to the fact that more often than not, we get the balance right and we layer the right kind of regulation on top of our property rights institutions.
And that is no easy feat. But can you share a real-life example or a world situation where your research has actually been applied or even could be applied to improve the prosperity of a country?
Well, Trinity, as you may know, I was the chief economist at the International Monetary Fund in 2007 through the end of August 2008. And we worked very long and hard during that period to try and make financial systems more robust and to try and head off some aspects of the financial crisis. I'm not saying we were particularly successful in that, but from that work came a lot of ideas about financial reform in the US, in Europe. And I've had the great pleasure of working with Sheila Bair and other distinguished individuals in the Systemic Risk Council subsequently that's supported by the CFA Institute. And we try on a weekly basis, basically, to bring best practice ideas to many parts of the world in terms of making all our financial systems, banking, non-banking, capital markets, make them more resilient in terms of exactly the institutional structure that market participants need in order for everything to function properly.
And your research spans across different regions, including sub-Saharan Africa and Latin America. Are there common institutional challenges in these areas, or do they differ significantly?
Well, every country is obviously different, Trinity, but I think the common theme, which is a rather tragic one, is that some countries, when they begin to build democracy and they begin to share prosperity, some sort of populist comes along, or there's a backlash because people feel they're not making progress fast enough. And that undermines the democracy. People say, well, it's okay, we have a brilliant populist, he or she will sort things out. And you might have 1 or 2 good years, but ultimately that form of authoritarian rule that breaks the existing institutions doesn't replace it with a fair playing field for everyone. That leads to a lot of corruption, it leads to a lot of malpractice, and it leads to massive amounts of disappointment, which of course can further downward spiral those economies, and hence terrible living conditions, pressure for immigration, and climate change just exacerbates the problems in many of those low-income countries.
Now, the Nobel Prize comes with a significant monetary award. Can you talk more about your plans on how you'll use that prize money?
Honestly, Trinity, I haven't talked to my family about that yet. It's the whole thing is so new. I'm still trying to catch up on emails that were sent to me at 6 o'clock yesterday morning.
Is there any areas of focus that you want to further explore?
Yes, at MIT, Doron Asimoglu, my co-winner, and David Autor, one of the world's leading labor economists, we run a research group called Shaping the Future of Work. And our priority there is to find ways not to stop technological progress, because that's impossible and not a good idea, but to shape it and to push it in ways that will be pro-worker, by which we mean creating more opportunity, more higher productivity, better pay for the people who didn't necessarily go to college. We think AI provides a fantastic opportunity to do this, but it's not necessarily the path that we will follow. If big tech companies only dominate the technology formation agenda, you're probably not going to get pro-worker AI. But there's a lot of other people in this society and other societies with a lot of really good ideas about how to use what AI is now unleashing. So we're all about studying that, amplifying what works, and trying to help move policy in the direction of being supportive of developing pro-worker AI.
And quickly, we have about 30 seconds left, Professor, but from your vantage point, how do you engage your students in these sort of critical issues of institutional quality and economic growth? And what advice would you give young economists inspired so much by your work?
Well, business school students are all over these issues, Trinity. I mean, I've had thousands of students with fantastic discussions, and people see this in mattering in real life and real practice. As for research, I think the future of technology, shaping technology, redirecting technology, that is a fascinating and very difficult frontier. But, you know, at MIT, we don't generally work on easy questions, and it's not an easy place to work, so that fits.
Well, thank you so much, Professor. It was a pleasure having you on the show. Again, Professor Simon Johnson of MIT Sloan School of Management. Thank you so much for joining us today.
Thank you.
Now we're about 90 seconds out from opening up the U.S. equity markets. I'm going to bring in my colleague, Kristen Scholler, once again
Hi,
now
Trinity.
on the trading floor. I mean, it's looking like we're expecting a mixed open right now.
Yeah, it looks like we will get a mixed open. The Dow underperforming a little bit today, but stocks right in record territory, of course, after record closes yesterday for the Dow and the S&P 500 as we embark on this fourth quarter. And great to hear from your guests there, specifically about the progress being made on the economic front, right? We see, of course, the economy, broadly speaking, recovering. GDP growth of 3% here in America, at least in the third quarter. But on a bigger picture, I was fascinated to hear more about what he had to say.
No, absolutely. And the fact that they're implementing AI and technology, that's at the forefront of even these sort of discussions. And it was interesting to hear about he and his students are implementing this in their research and how he was working collaboratively with the other Nobel Economic Prize winners. And, you know, I did also ask him on his plans on spending that prize money. However, he said that he hasn't even talked to his family about that. Obviously, it's still very fresh for him. This is all very new. He's still digesting the information and this huge feat.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange, and rejoining me now is my markets guest from earlier, Ryan Dietrich, of course, of Carson Group. Ryan, we see the stock market opening a bit mixed, but still some strength out there, of course, on the back of these bank earnings, those big money center banks rising at the open. What could we expect would be in store for today's session?
Yeah, I think, we've got a little hangover from the holiday yesterday. Yesterday was really light volume. Yes, we hit all-time highs. By the way, it looks like a fun party on the floor right there this morning. So that's pretty lively. You can tell it's a bull market. But again, this today, I think the story I kind of talked about a little bit ago, crude oil. I mean, crude oil was down big time. Like, it was down 5% a little bit ago. That's kind of caught, obviously, the attention with the Middle East tensions. Maybe they're not going to attack some of those facilities we thought that Israel was going to attack. So that's potentially a positive on that front. But again, this week, I hate to say today is kind of boring. To be honest, it is. It's later in the week. Got more big earnings come up, and then Thursday, you got retail sales, industrial production, initial claims. So we're kind of looking forward. And again, just kind of, getting a lot of people getting back to work. Obviously, bonds were closed yesterday, so light volume day. So overall, though, with the election 3 weeks away, that's another big bullseye we're going to be talking a lot about as we get closer.
It's interesting, Ryan. I know you follow the chart patterns and obviously the data, the historical data and trends very closely, but historically over time, we have seen October be a more volatile month. And despite what we saw, of course, at the beginning of the month with tensions rising in the Middle East, we've seen relative calm, what appears to be relative calm these past few days. Is that surprising to you, considering what we've seen happen in October over time?
I'm going to blame you if you just jinxed it, Kristen, by the way. But no. Yes, I mean, it is pretty rare. I mean, October is the most volatile month. You tend to have more VIX spikes in October than any other month. You get more 1% up and down moves in October more than any month. Now, this month, obviously 2 weeks in, give or take, we've bucked that trend. It is interesting, though, like to start the month of October had a little bit of a dip. Obviously, to start the month of September, had a little bit of a dip. We had that 8% violent pullback to start the month of August. So for whatever reason, the beginning of months have been rough, but then we kind of fight and claw and scratch our way back. Historically, getting real into history here, it's kind of the latter half of October that does a little bit better. It is the first 3 weeks or so that's worse. Of course, October 19th, 1987 is in there. Yeah, that skews things a little bit because that was a stock market crash in 87. But the reality, again, is October, I would be pretty surprised if we didn't have more volatility before this election in 3 weeks. And by more volatility, I'm talking maybe a little bit of downside and a little bit of risk, taking off risk again ahead of the big event in 3 weeks.
Ryan, we see the S&P 500 up more than 60% from that bear market low in October of 2022. As our investors and our viewers look at where we are in the economic cycle, what would you tell them in terms of what kind of churn we might be seeing from here?
First off, I talked a little bit ago about the bull market. The third year of the bull market historically is kind of choppy, not all that great, because usually your first 2 years are really good. Like you said, we're up over 60%. Your average first 2 years of a bull market is like 58%. So we're right there. But again, I mean, listen, Mark, when do things really usually peak? It's when there's a lot of optimism out there, when people are really excited. I get to work with financial advisors every day, talk to their clients. We're simply not seeing that. Just look at consumer confidence, okay? Any of the different consumer confidence that are out there. Not saying we couldn't peak tomorrow. We don't expect that to be the case. So you're going to need to see more confidence coming in, Kristen, before you get to that ultimate peak. I think that's just kind of how we see it. And like, one other thing, once a bull market actually gets to 2 years old, like this one has, you know what? They usually keep going. We've had some shorter ones, yes, but once you get to that second year, like we have, that momentum can continue. Doesn't mean your third year is going to be just rip roaring, but bigger picture, again, with this economic cycle of growth, with the Fed cutting, with really no major signs of a monster under the bed, we think that once it's like a cruise ship, right? Once it gets moving, it can keep moving. There's still a good deal, likely a good deal left to this economic cycle of growth. Now, the Fed's cutting, two things here real quickly. Housing's been an issue, no question. Fed cutting. We haven't really seen mortgage applications start to spike yet, but with a few more cuts, we think that's the case. And what drives businesses? It's small businesses. What drives the economy? Small businesses. More people work for small businesses in the United States than anything else. So small businesses are kind of, with higher rates, it's harder on them, right? It's harder to get those loans. It's harder to pay employees as much as you want when rates are higher. But with lower rates, that could be a tailwind for small businesses and for housing, two parts of our economy, Kristen, that honestly have not held up all that well the last couple of years. We're optimistic it'll do a lot better next year.
Ryan Dietrich, so appreciate you joining us, of course, a market strategist with the advisory firm Carson Group. Ryan, thank you again.
Thank you.
All right, well, as we see kind of a mixed muted open, but stocks still hovering near record highs, I think we're going to take a quick break, and we will see you on the other side.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with Savina Rizova. She is co-CIO and Global Head of Research at Dimensional. Thank you for stopping by.
It's a pleasure.
So we understand you've launched this new UMA service for your advisors. Could you tell us a little bit about it and what the benefits are?
Absolutely. These days, advisors want to both scale and customize. They can customize with SMAs. They can scale with managed models. A UMA gives them the opportunity to both.
So one of the things that's interesting is there's a lot of conversation in our world about ETFs, direct indexing, UMAs, SMAs. How do we sort of distinguish between all of that?
Absolutely. SMAs are typically portfolios of individual securities, stocks or bonds that you hold in one account. Direct indexing is a subset of SMA, which just starts with an index, and then you customize off of that. Our SMAs do not start with an index. They start with a dimensional defined starting strategy. But SMAs generally are used for customizing for specific client needs, tax needs, or ESG preferences. Managed models are models typically of ETFs or mutual funds that allow advisors to scale by assigning many different clients with similar needs to the same custom model they developed. On our UMA platform now, they can do that. They can assign multiple clients to the same asset allocation they put in on the platform, and this allows them to have like a very consistent investment experience offered to different clients.
Are there key benefits? How does this help a dimensional advisor?
Oh, it helps them to gain operational efficiency because they can actually outsource the day-to-day asset allocation, taxes, and a cash flow management to Dimensional, and they can also have Dimensional data.
Welcome back to NYSE TV Live, everyone. I'm Trinity Chavez, and now to some news that's out of this world. NASA's Europa Clipper is on its way to Jupiter's icy moon, Europa, aboard SpaceX Falcon Heavy. It's about a $5 billion mission to explore if its hidden ocean could support life. This comes just days after SpaceX made history by catching the Starship booster with mechanical arms. And joining me to discuss this further is Chad Anderson. He is the founder and managing partner at Space Capital, which is an investor of SpaceX. Good morning, Chad.
Good morning. Good to be here.
It's great to have you. So talk to me about if there is life-supporting conditions found on Europa, what this means for the space industry and also future investments.
I mean, there's a lot of reasons for doom and gloom, right? I mean, a lot of things that you hear in the news these days, but it's also an incredible time to be alive, right? I mean, this is a massive endeavor for humanity to explore other worlds. So the fact that this is made possible by SpaceX and their Falcon Heavy vehicle is testament, I think, to their ability to make space more accessible and bring down the costs. It's not only allowing entrepreneurs and new businesses to do business in space, but it's also allowing governments to do more with their limited budgets, like this Europa Clipper program.
And how does SpaceX's recent success open the door for new opportunities, both from an investment standpoint, but also the broader space ecosystem?
I mean, this was a massive weekend for them, right? And to witness the scale and ambition of this company is really, truly awesome. So them catching the Starship Super Heavy booster is a massive step forward in terms of rapid reusability, right? Moving from rockets, launching them and throwing them away, to moving more towards sort of airline type operations where we're launching the vehicle, landing the vehicle, refueling it, doing a maintenance check, and then relaunching it again that same day. That's where we're headed. So this is so far beyond what any other company is doing. It's really, really incredible.
Go ahead.
No, and I was just going to say that on top of all of that, right, their Falcon 9 was returned to flight and also launched from California. They were going to bring the Crew 8 mission back from the International Space Station, although the weather prevented them from doing that. And they also launched this Falcon Heavy mission. So it was a huge weekend for the company.
I know, very huge weekend. And I do want to talk about what other are the biggest growth opportunities right now that you're seeing in the commercial space sector.
Right. So we've been operating in space for decades, but it's only recently become a category for investment. And that's been over the last 10 years on the heels of SpaceX, right? We've gone from a few hundred satellites in orbit to now 10,000 plus satellites and more being launched all the time. SpaceX is a key driver of this, but there's more competition and more satellites coming online. We're going from 10,000 to 100,000 in the next 5 to 7 years, right? So the number of satellites on orbit is now growing at a pace that is faster than Moore's Law. So it's basically a straight line up if you graph it. So the growth here is massive. Managing all of those satellites in orbit, managing the traffic, and coordinating those activities on orbit is super important.
And how does Space Capital balance scientific discovery along with space investment opportunities?
So we're investing in companies that are doing incredible things and making a lot of money doing it. I think that these scientific activities are sort of like a happy byproduct of that, right? We're not investing in the Europa Clipper program, like this is a government mission, but we're investing in the tools that are enabling governments to do those better, more effectively, more efficiently.
Can you talk to me more about your investment strategy, especially when you see the companies that you have invested in, like SpaceX, achieve success like this?
Yeah, I mean, so launch is one piece of the puzzle, but it really makes up like 9% of what's going on in the space economy. And then the media likes to talk about, and we all like to talk about, the commercial space stations, the manufacturing on orbit and that sort of thing. But that really, and lunar and going to the moon, that really makes up 1% of what's going on. The vast opportunity in the space economy today is in satellites. GPS, geospatial intelligence, satellite communications, the satellites that are on orbit, the infrastructure that's on orbit generating this data, and leveraging that data to power the world's largest industries here on Earth, which is actually what's happening today. So one of the biggest opportunities for investors today is applying AI to geospatial data sets. We've had satellites in orbit for decades, generating vast amounts of data, and it's way too much for humans to comb through. Now that we have AI at our fingertips, we can apply that to these data sets and drive really useful insights that are allowing us to do all kinds of things, like powering business and industry, but also helping in disaster recovery. The use cases are really infinite.
And obviously AI technology, the rapid development of Gen AI, all of this is at the forefront of conversations around the world, and I would imagine too in the space sector. But how are you involved in these sort of conversations, especially from a cybersecurity standpoint?
So we've also made several investments in cybersecurity. Obviously, space technologies are essential for our economic stability and our national security. So they are incredibly important to our economy, so they also make them prime targets for adversaries, right? So security is key, not just in terms of cybersecurity, which we're also investing in some of these areas as well. It's really important to, but also in terms of like kinetic capability, offensive and defensive capability, right? Now that we've gone from a world where there was a few hundred satellites in orbit that were really like, if something went wrong, world leaders could pick up the phone and talk it out, right? These days, there's way too many players, there's way too many companies, there's way too much activity, right? We need to have mechanisms in place and companies in place that are helping to enable us to operate safely.
A lot to look out for to operate safely. Thank you so much, Chad Anderson, managing partner at Space Capital, which again is an investor of SpaceX. Thank you so much for joining us.
Thank you.
Now we'll have much more on the space industry and what's impacting the whole sector, especially when it comes to the elections, just right after this break.
So, Madhu, tell me, what are your thoughts on the current market conditions in the AI space, and how is ICERA positioned to navigate them?
Very good. Lots happening in the AI space. You saw recently with NVIDIA, Jensen, the CEO of NVIDIA, making announcement, I think, month of March. And last week we were at ServiceNow event. And today, Microsoft with Satya announcing a lot at Microsoft Build on Copilot. The market is evolving so much in Gen AI space. Every month there's something new. And what at ICERA we really position is we are the ChatGPT and AI search for enterprise. So the new thing right now, this 2024, is all about AI referring to enterprise, right? How enterprises can use ChatGPT and AI search to do it in a secure way without data leakage, without data being lost, and doing in enterprise data that's behind the firewalls. That's the biggest trend that's happening right now in the AI space.
And what growth have you seen over the last year?
See, for ICERA, we've been very fortunate and we're lucky. So it's thanks to all the customers, partners, and employees. We've been growing more than 100% in last 12 months. We have added so many new customers. We are landing multiple large deals. So we are very fortunate to get customers that starting from companies like Cisco, Workday, Gap. We have customers like Gilead, Amgen. So we get so many new customers adding every year, every quarter. the growth has been fantastic.
Now, GPU usage is skyrocketing, leading to more and more energy use every year. How has Icera helped combat these issues?
So what Icera has done is we have done a very interesting architecture. We call this one agentic inference architecture. It's a hierarchical agentic architecture in the sense the way in which we do it is we separated the foundation models, domain-specific LLMs, and task models. Our secret sauce is in the domain-specific LLMs in our hierarchical agentic architecture. By doing that, what happens is for every training and in inferencing, we don't need to always go use that much compute and NVIDIA.
Welcome back to NYSE TV Live, everyone. I'm down here on the floor of the stock exchange, joined by Marcelo Midland. He's the chair of Pampa Energia, the holding company of TGS, which of course was here to celebrate the opening bell today. Marcelo, great to have you on the show, and welcome to the stock exchange.
Thank you so much. As I told you, the New York Stock Exchange is like my second home in New York.
Well, we are very happy to have you here, of course, when you're able to make the journey from Latin America. And as the largest shareholder of TGS, of course, on the podium to celebrate the opening bell today, what direction are you looking to steer this company in?
As you may know, Argentina has the second largest shale gas and oil reserve in the world after the United States. So TGS is responsible for building all the infrastructure so Argentina can produce those resources and export to the world. So the direction of TGS is to continue investing to consolidate our role as the main transporter and processor of gas and oil.
I want to talk about more of the landscape in Argentina and Latin America more broadly. It was just a few weeks ago that Argentina's president, Javier Milei, was at the stock exchange during the UN General Assembly. How are his economic policies impacting your strategy at the company and as the largest shareholder of TGS?
Yes, the policy of President Milei is for the first time in many, many decades to go to fiscal equilibrium and monetary discipline. So it's the first time we are trying the very simple and common sense policy of fiscal responsibility. That's bringing stability, that's bringing inflation down. And when inflation is down and we have more stability in the economy, companies can invest and the economic activity recovers. So it's very important to maintain this policy.
I want to talk more about stability because when we look at what's been happening in the commodity market of late, since early October, at least maybe concentrated in early October, we had seen some volatility in energy prices, and that was as tensions were rising in the Middle East. How stable is the market that you operate in?
Argentina, with the development of Vaca Muerta, this second largest shale reserve in the world, is self-sufficient. So now we are producing all the oil and the gas that the country needs. So we have ended all kind of imports of energy. So that's consolidating a lot the macroeconomic figures of Argentina. So the volatility worldwide is not damaging Argentina as other countries because we are producing our own oil and our own gas. And on top of that, we are exporting every year more and more energy to the world.
How does that impact prices in Argentina and for your customers around the world? We had seen inflation be such a key story, of course, globally, and especially in Argentina of late.
Yeah, inflation is a big problem for Argentina. We have had the largest and longest inflation period in the world. So that's why I'm saying that Milei's policy of maintaining fiscal equilibrium is so important. In terms of the energy sector, what we need to do is to produce every year more oil and gas so as to be able to export more. As you may know, Argentina is known to be a big agro exporter of soybean and wheat and maize. And now it's going to become a very big exporter of oil. So that's going to add to the stability and the consolidation of the economic situation.
Marcelo, thank you so much for taking the time to join me after celebrating the opening bell on the podium up here at the New York Stock Exchange. That's Marcelo Midland, of course, the chair of the holding company of TGS, Pampa Energia. Well, we're going to take a short break, and then we'll have more of our space coverage on the other side. Stay with us.
Our company is designing the most advanced memory and storage controller chips to help solve the bottlenecks for the data pipeline for the AI and the cloud infra. We are building a platform from the chip design to the firmware, software, all the way to the turnkey modules and helping customer get qualification and deployment in the data center. That really help us to differentiate from the traditional companies that are facing a lot of efficiency and innovation challenges.
And you recently announced a new SSD controller chip, use of a new ARM Cortex R8 cores. It's a new technology in this space. Tell us exactly what this is, what's unique about it, and about the new technology.
We have been focusing on designing most advanced storage and memory controller chip solutions. These technologies are helping solving the bottlenecks for our data pipeline in the data centers, and it's extremely critical for our future growth. The technology we innovate and we adopt will serve that purpose. For example, the technology we just announced on the advanced error correction coding, that will help really significantly improve the reliability of DRAM tier of high capacity, and also help reduce the server downtime. On the other hand, we also partner with industry leading IP vendors like ARM. Their latest R82 core is the greatest and latest embedded CPU, which is great for our next generation controller chip. And it has super great performance, power consumption, and a variety of new features. So that's how we synergize with best-in-class IP and
Now, with the upcoming election, the future of U.S. space defense is in the spotlight. As the Space Force continues to play an increasingly critical role in national security and technological innovation, the outcome of the election could bring significant changes. Here to break it all down and what the election might mean for the Space Force and the broader space landscape is JD Durkin, CBS News contributor. JD, thanks for joining us this morning.
Good morning. I don't know if I've ever been more excited to talk with you about anything than the Space Force and general rocketry. I love this topic, so it's good to be with you.
Let's talk about how the shift in political leadership might have an impact on the Space Force and their priorities.
Yeah, I mean, it's interesting. I would actually argue space policy is probably one of the things where Vice President Kamala Harris and former President Donald Trump are probably much more on the same page than a lot of other existing policies. And that's because I think, to Donald Trump's credit, a lot of the things that he started, like the Space Force itself, like the announcement of the Artemis program, ambitions to get back onto the lunar surface, Trinity, these are all things that President Biden continued and Vice President Kamala Harris was a part of. So we know that both candidates want the U.S. to be a leader in the space race. They both want to compete against countries like China and Russia for those ambitions. We talked about the Artemis program, and they really want to enhance private sector space initiatives as well. I think the key differences might actually have to be the kind of Elon Musk wild card, given the success of SpaceX. We had this incredible rocket launch for Starship 5 a few days ago, the fifth test launch for SpaceX there, and the Starship Heavy booster. Of course, he's endorsing Donald Trump. I think that's maybe the wild card, in that if Trump does win and he makes Elon Musk the self-described Secretary of Cost Cutting, what does that mean for the future of space travel, the relationship with a company like SpaceX and the FAA? And I think that's a little bit of the hinge. The difference there between Harris and Trump is really that Elon Musk component.
Especially when it comes to the public and private sector and meeting the needs, especially when it comes to balancing national security, defense, and also innovation. How do you think the new administration will be able to balance all of these very important priorities?
I think that was the clearly stated goal of creating the Space Force. And again, I think, to Trump and former Vice President Mike Pence's credit, this was something a lot of Democrats criticized when Donald Trump created. You had someone like Mark Kelly, who was on the short list to be Kamala Harris's vice president, himself a former space shuttle astronaut. He called the Space Force explicitly a dumb idea when it was created. And yet, once Democrats took control, they sort of looked around, evaluated the position that the government agency was in. They said maybe it actually is a good thing to have some of these strategic policy initiatives controlled by the federal government, and to sort of prepare for potential warfare, and infrastructure for a new age of space. And I think ultimately this is about combating Beijing's ambitions, trying to hold China accountable. You listen to the candidates on the campaign trail talk about doing so economically, talk about doing so through the lens of trade and tariffs. But in terms of rocketry and Space Force initiatives, that's a whole other battlefield. And again, I think it's actually something where Vice President Harris and former President Trump actually kind of see eye to eye right now.
And you know, we have about 60 seconds left, JD, but I do want to talk about how this election outcome might have an impact on the U.S. stance when it comes to space militarization and defense, especially with countries like China and Russia.
Yeah, I think, the unfortunate reality for a lot of voters, if you listen to both campaigns right now, there's a lot of promises that are being made, and it's very difficult to discern what is campaign just sort of rhetoric and what is actually going to be a reality when they come time to govern. But I think these threats are very front and center. I think we have a little bit more of a sense of what the Space Force will look like if Donald Trump does have a second term, because he did create the Space Force and he created the Artemis missions and these things that Democrats have been willing to continue. We have kind of fewer details with regards to what Vice President Harris would want to do, even if she is actively chair of the National Space Council. It's a bit of wait and see, but certainly these threats are not going anywhere. They're going to be continued to underscore it. It's actually an overall topic I would like to hear both campaigns talk a lot more about between now and Tuesday, November 5th.
And I'm sure we'll have you back on the show to discuss this further, JD. A lot to look out for. Thank you so much.
Can't wait. Thanks a lot.
JD Durkin from CBS News. Again, thanks for joining me. Now I'm going to bring back in Kristen Scholler as we wrap up today's show. Kristen, it's been a great show, but you know what? We also have the second annual Space Summit coming up later on in October, which, I'm going to be covering and speaking to a lot of the biggest innovators and leaders, in the sector, talking about both space investment, some of the biggest problems and challenges that we're seeing right now in the space sector, especially when it comes to national security and cybersecurity and just so much more.
The biggest question that I have for the Space Summit is, what is the business case for space, right?
Yeah.
We had seen Jeff Bezos, I think Elon Musk had even commented on this, using space for business, between satellites and being able to conduct other business in space, potentially on the moon. Those are some of the key factors that I'd like to hear about during that Space Summit.
Well, we're definitely going to be covering all of that and so much more. Again, that's going to be October 23rd here at the New York Stock Exchange on the 6th floor. But, I think that just about wraps it up, Kristen.
That's exactly right. That's going to do it for our show. Thank you for watching. I'm Kristen Scholler.
And I'm Trinity Chavez. Have a good day.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital market here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege